Tech stocks are in freefall today, and the culprit might surprise you. It's not a recession, not a geopolitical crisis. It's an AI company you've probably never heard of out of China, DeepSeek. In this video, I'm going to break down how DeepSeek's groundbreaking announcements sent shockwaves through the tech world, why some stocks are tanking, but not others, and what this means for the future of AI and investing. Over the past few months, DeepSeek, a Chinese AI company, dropped a series of bombshell announcements. First, their V3 model revealed shockingly low training costs, just $5.5 million to train the model. For context, training leading-edge AI models like OpenAI's GPT-4 can cost hundreds of millions of dollars. DeepSeek achieved this through insane optimizations, like compressing memory usage and programming low-level GPU instructions to work around the US chip bans. That's right, they did all of this using just H800 GPUs, which are weaker than NVIDIA's top-tier GPUs due to US sanctions. This is a huge deal because it means that you don't need the most expensive hardware to train cutting-edge AI models. Then came R1, DeepSeek's reasoning model. R1 is competitive with OpenAI's O1, but here's the kicker. It's open source. I shouldn't actually say open source. I should say open weights. The weights and biases are open to the public. That means anyone can use it, modify it, or run it on their own servers. No need to pay OpenAI or Anthropic for access. And R10, a pure reinforcement learning model, taught itself reasoning without human feedback. It's an aha moment where it figured out complex problems on its own. We have computers improving themselves without human supervision. This is a big deal in the world of AI. It's also a massive blow to companies like OpenAI and Anthropic, who have been charging premium prices for their proprietary models. DeepSeek just showed the world that AI doesn't have to be locked behind closed doors. So why did tech stocks crash? DeepSeek's low-cost and open-source model threatens the business model of giants like OpenAI and Anthropic. If anyone can build high-quality AI for cheap, their profits are at risk. DeepSeek's ability to train leading-edge models on weaker hardware undermines NVIDIA's dominance in AI chips. Investors are rightly questioning whether NVIDIA's growth story is sustainable. NVIDIA's dominance in AI hardware is suddenly looking a lot less secure. And Google, they're in trouble too. Cheaper AI means more competition for their search business. If AI can answer questions better than Google, why would anyone use search? It also diminishes the value of the massive investments they've made in TPUs. Not everyone is a loser, though. Companies like Microsoft, Amazon, Apple, and Meta are actually long-term winners. Cheaper AI means they can offer more services at lower costs, driving higher usage. Apple is a winner because these models can be deployed on much smaller systems, leading to potential rollouts across Apple's ecosystem. The reduced memory requirements make edge on-device AI more viable, and Apple's hardware is perfectly suited for this. Amazon's decision not to invest in frontier models now looks like a very smart one. AWS can leverage open-source models to provide cheaper AI services. Microsoft's lower inference costs mean Microsoft can offer AI services at a fraction of the cost, driving higher usage. And for Meta, cheaper AI training and inference helps Meta achieve its AI-driven vision for social media and the metaverse. But in the short term, the market is freaking out. Investors are realizing that the AI industry is about to get a lot more competitive and a lot less profitable for incumbents. DeepSeek's open source approach contrasts strongly with a closed source strategy of US companies like OpenAI. I find it deeply ironic that a Chinese company is launching leading-edge open-source models to compete with closed American ones. DeepSeek's success also has massive geopolitical implications. China has caught up to the US in AI despite the chip ban. In fact, the ban might have backfired by forcing Chinese companies to innovate harder. Now, the US faces a choice. Double down on defensive measures like expanding the chip ban, or embrace competition and innovation. One thing's for clear, the AI race just got a lot more interesting. And DeepSeek, they've proven that openness and efficiency can disrupt the entire industry. So let's talk a little bit about the models. In terms of the technical breakthroughs, there are 4 technical breakthroughs that are pretty key here. The first one is DeepSeek Mixture of Experts. It splits the model into specialized experts that are activated only when needed, reducing computational cost. DeepSeek's innovation in load balancing and routing made training much more efficient, not just inference. Next, there's DeepSeek Multi-Head Latent Attention. It compresses the key value store, dramatically reducing memory usage during inference. This is a game changer for running large models on devices with limited memory like smartphones. Next, there's floating point 8-bit precision. They reduced parameter precision during calculations, optimizing compute efficiency. And finally, also importantly, there's low-level PTX programming. DeepSeek engineers programmed low-level PTX instructions to manage cross-chip communication, an insane level of optimization that only makes sense when working with constrained hardware. DeepSeek likely also used distillation, which is training on outputs from other models like GPT-4 to improve their own model, reducing the economic moat of companies like OpenAI and Anthropic. DeepSeek's success reinforces the idea that AI progress is driven by compute and data, not human ingenuity. R10's ability to teach itself reasoning without human feedback is a prime example of this. Finally, and most importantly, DeepSeek's advancements suggest we are approaching a point where AI models can train and improve themselves, accelerating progress towards artificial general intelligence. China's success with DeepSeek could unleash a wave of innovation, further closing the gap with the US. Bottom line, commoditization of AI will reshape the industry, favoring companies with strong ecosystems and cost structures over those with proprietary models. Companies like OpenAI and Anthropic will need to adapt or risk being left behind. If you want to stay up to date with the latest investor news, please click the like and subscribe button. And thank you for listening.